Hey guys, what's up, how's it going? Welcome to today's video. In today's video, I'm going to be sharing with you guys my #1 Canadian-based dividend stock pick to buy right now. So a couple of days ago, I polled my audience asking you guys what you would be interested in seeing in regards to future videos on this channel. And you guys all agreed by 71% here that you guys wanted to see my favorite Canadian stock pick for right now. So that's the video we're going to be doing today. And because you guys did express some interest in the dividend payout ratio, I will be pumping out a video on that over the next couple days. And a big thank you to everybody who voted on this poll. Appreciate it very much, guys. So before I tell you guys what stock I'm going to be picking right now and what I recommend as being the #1 Canadian stock, I'll give you guys a hint. And before we get into it, I'm just going to say, let's spend a little bit of time talking about Canadian banks for the time being. So Canadian bank stocks have had it rough for the past little while. Canadian banks took some pretty big hits at the start of the year, and when the stock market crash happened, they went down quite a bit. And they've struggled to keep coming up. They've gone down, they've gone up, and every single time it looks like they're going to have a little bit of life, they just drop back down. Well, this isn't entirely true, but you kind of get what I'm saying here. In fact, some bank stocks have actually gained in value since the 2020 stock market crash had happened earlier in March. And that's a good sign if you guys like to see green in your portfolio. You've probably assumed that the #1 stock that I'm recommending is going to be a Canadian-based bank stock. Now, I'll give you guys a couple seconds to think about which Canadian bank stock I recommend that you guys invest to right now. The #1 dividend-based stock in Canada is going to be the Canadian bank stock Toronto Dominion Bank, otherwise known as TD stock. Now, I've talked about TD bank stock a lot in the past. In fact, I actually did a review video in the past about TD stock, and if you guys want to check that out, I'll link to it in the description of this video. But in this video, we're going to talk about what's kind of been going on with TD stock and why I actually think it's one of the best dividend-based stocks going into the future. Now, I'm going to be 100% honest here, guys. TD stock, as well as any other Canadian bank stocks, they've got a long road ahead of them, and they're going to have a hard time going into the future. The housing market is very questionable at best in the Canadian market right now. Corporate debt is at an all-time high, so that basically means that the chances of small businesses and whatnot going bankrupt or claiming bankruptcy over the next little while is actually very probable, and it's happened to a lot of businesses across Canada. And this is bad for the Canadian banks because that means that the loans go down and then the bank basically just loses money. And with the real estate market and small business market and loan market basically being a big question mark and nobody knows what's really going to happen into the future, if we turn to other sectors such as oil, well, don't even get me started on oil right now. Oil sector in Canada is obviously not doing good. I'm not even going to touch oil stocks in this video with a 10-foot pole. And with all these problems that I just mentioned, I do believe that probably going into the future, Canada probably will be headed into another recession of at least some kind. Now, the Canadian government has definitely done a good job at providing aid packages and reliefs for people to pay their mortgages, small businesses to help out pay their rent and whatnot. And this is a good thing because it helps, it's definitely helped like the stocks kind of recover, and it's helped the banks kind of deal with all these issues that they're having. But at some point in time, somebody's going to have to pay back all this money. Well, the bank stocks, like I mentioned, basically have a lot of work ahead of them, and it's not going to be an easy road ahead. But all things considered, I do believe that it's not all doom and gloom, and I do believe that out of all the bank stocks that there is out there, I think TD bank stock is probably the best suited to handle and weather the storm going into the future. Now, the biggest reason why I think Canadian bank stocks in general are well suited to invest to right now is because Canadian bank stock traditionally and TD stock traditionally have done really well in the past. You know, they've been through recessions, they've been through trade wars, they've been through real estate collapses, they've been through all kinds of problems, and they've come across on head, and they continue to rise in value in stock over the years. So I think Canadian bank stocks, out of all stocks rate and companies out there right now in Canada, I think if you wanted to invest into something that's going to survive into the future and continue to grow, I think TD stock is a great option for anybody who wants that kind of portfolio right now. If anything is going to survive the upcoming recession, it's definitely going to be Canadian banks. Like I mentioned in the past, I think the road ahead is going to be really, really difficult for TD, but we are already seeing that they've kind of had some ups and downs, and they're probably going to continue to go up and down over the next little while. But if you look at the past couple days, TD stock has actually kind of already risen up, which begs the question, is TD stock still a good investment? Is it still worth buying the stock right now? And I do believe it is still worth buying because it's still a lot low, it's still a lot less than what it's been trading at before pre-market crash levels that happened at the start of the year. But I still think it's gonna it's got a long ways to go up, and I still think it's really, really worth buying at this current moment in time. Now, one thing that's important and worth mentioning is that all companies across Canada, especially banks, have taken a massive hit in their earnings report for the second quarter of this year. In fact, TD has reported that they've suffered 50% of their income decrease from the last year, and that obviously doesn't look like a good sign, and it isn't, but we have to take all things into consideration, and pretty much all banks across the board have suffered huge losses, and just all companies in general in Canada. And this really hasn't come at a big surprise. Everything's shutting down, people all suffering, having a hard time paying their bills and whatnot. It's kind of just expected to happen. So I think the companies that are able to kind of weather the storm are going to be the ones that are going to come out ahead. And when the economy starts to open up and people can, that cash flow is going to start going, people are back into the country and people are going to be working again, I do believe that things will pick up going towards the end of the year. And it's also important to mention that TD has lost a big chunk of their profits coming from the US. A big thing that was really attractive to me about TD is they had a lot of work into the US. They had a lot of large customer base and a lot of profits that came from the US, but they did report a 70% decrease in US activity. And this could be because of, obviously it could be because of the market crash in general. It could be because of the border closing up. It could be because, there's just less activity overall. And I think once things kind of open up, the border opens up and people go back to work, we should start to see that US activity rise. And I think we'll get back to where they were before, where they were doing really, really well, basically making money from the US economy. But the best thing of all about TD stock is their healthy, juicy dividend. When it comes to dividends and bank stocks and Canadian bank stocks, TD is about as good as it's going to get. Now, before we go any further, I just want to mention that it's important to mention that at the start of the year, before the stock market crash happened, TD actually increased their dividend. And the good news is that it looks like TD will probably keep this dividend increased towards the end of the year. And even though a lot of other companies have been decreasing their dividends, Canadian bank stocks have historically done pretty well at keeping their dividends. And I think TD stock is going to try as hard as they can to keep that dividend. And I wouldn't be surprised if they kept it towards the end of the year. Now, at the start of the year, like I mentioned, TD did increase their dividend, and they increased it up by 7% from the previous year. And that brings up their dividend yield in total right now to be a nice juicy 5%. This is a nice dividend yield, and I see them keeping this dividend yield until the end of the year. And if you are a dividend investor, I think investing into TD is one of the safest bets to get that nice solid 5% yield. Now, keep in mind, companies can decrease their dividends, and it has been happening. But when it comes to Canadian banks, they have done a pretty well job at keeping their dividends afloat, like I mentioned earlier. In fact, I would recommend that if you do invest into Canadian banks, you invest into the big banks, because there have been some banks that actually have cut their dividend, and you don't want to be in a position where you invest in a company and then that company makes a huge dividend cut. So I highly recommend you guys just stick to the big banks in Canada. And if you guys invest into TD, you'll probably be safe, because I don't think they will cut their dividend. In fact, Laurentian Bank of Canada actually cut their dividend by 40% just recently, which really hurt. But this just goes to show why I think it's important that you invest into the big banks of Canada and stick to the big companies, because they're the ones that are going to ride out through the storm and get ahead. And I would probably avoid the smaller companies right now, just in case, because you never know. In fact, a lot of companies will be cutting their dividends over the next little while, and you don't want to be in that position. And it can happen to everybody, but I do believe if TD was to cut their dividend, it definitely wouldn't be by 40%. So overall, I still think TD stock is one of the best dividend-based stocks to invest into. It has been for quite a while, and even though the stock market crash just kind of pushed it down, and there's been some uncertainty about banks being able to maintain their business and whatnot, I think TD is going to do a great job in the future. In fact, it's already kind of on its way back up, and I still think, even though it is on its way back up, it's still a nice buy right now. And if you guys want to build a nice solid dividend portfolio, I still think TD stock should be a core component of that portfolio if you guys want to have good results into the future. So the road ahead looks pretty grim, and our economy is going to suffer, and we probably will be heading into a recession. I think TD stock will come out on top, and I still think it's a super safe buy. So if you guys enjoyed this video, let me know what you guys think in the comments. Please give the video a big thumbs up. I would appreciate it very much. And if you guys want more Canadian-based content and some Canadian-based stock picks and whatnot, please subscribe to the channel. I really appreciate it, and thanks for joining me today, guys. Hope you guys enjoyed this video. Let me know what you think in the comments section, and I'll see you guys later.